Stay informed on earnings trends and analysis in Zach's Earnings Outlook.
Joining me to talk about earnings trends this time is our research director, Shiraz Mian, as he normally does. He's our go-to person here for earnings, trends, analysis, all that good stuff.
That's right.
Shiraz, you've characterized the Q3 earnings season, looking back in the rearview mirror, as a mixed bag. So does that mean that you're not overly enthused about the results you've seen?
That's true. I'm not. And the reason for that is that in most respects, what we saw in Q3 was continuation of the trends that have been in place for more than a year, whether we are talking about growth rates, whether we are talking about beat ratios, and even guidance. We did not see any change on most fronts. In fact, in some respects, one could even argue that the picture has weakened relative to the recent past. And I have a couple of charts to share with folks to show what I mean. And in this first chart, I'm comparing the earnings and revenue growth rates. The orange bars is earnings. The green one is revenue. I'm comparing the growth rates for Q3 with the growth rates for Q2, and then the growth rates for the 4-quarter average. And as you can see, the growth rates are below what we saw in Q2 and about in line with what the historical growth rates have been. A similar kind of picture emerges when you compare the beat ratios for Q3 with what we saw in Q2 as well as the 4-quarter average. The earnings beat ratio is a bit on the higher side, but the revenue beat ratio is about where it has been. And I will show in another chart to folks that in some other respects the picture is even weaker. So that's the primary reason why I'm not overly excited about the Q3 earnings season. Wasn't bad, but it wasn't great either.
All right, let's spend some time here looking forward into Q4.
That's right.
In the new year, that's when the Q4 reporting season will take place. Pace and magnitude of negative Q4 revisions continues to grow, though. So what is this saying about the Q4 earnings season?
That's true. In fact, the magnitude of revisions that we have seen for Q4 is the highest that we have seen in more than a year. So we are seeing more negative revisions for this quarter than we have seen in any of the recent past. And that's one of the factors I was referring to when I said that in some respects the earnings picture is even weaker than in the recent past. And I have this chart which shows how the earnings growth estimates for Q4 have evolved over the past couple of months. And as you could see at the beginning of the quarter, early October, late September, the expectation was for earnings growth in Q4 to be almost 10%, 9.6% total earnings growth for the S&P 500 in Q4. Right now, it's down to 4.1%. So a massive downward revision in expectations. A big driver, though, I must add, is what's been happening in the energy space. Its revisions are broad-based. They are all over in pretty much all the sectors, but they are extremely pronounced in the energy space. So more revisions now than we have seen any time in the recent past.
So what you were alluding to is the falling oil prices that we've been witnessing here for some time. That is probably going to be reflected in revenue growth and capital expenditure plans for the oil companies when they report next, correct?
Absolutely, absolutely. That's the when you look at the estimates for Q4, particularly how the revisions have come about for Q4 on an ex-oil basis, it's still weak. It's still a downtrending line. But it's not as pronounced as what you see over here. On an ex-oil basis, it's about in line with the historical trend. So yes, estimates for earnings and revenues for the energy companies have been coming down sharply. And that is going to be a drag in the aggregate picture, but particularly for the sector as a whole.
Okay, and that's kind of an obvious one because you talk about falling oil prices having a correlation to revenues
Absolutely.
that the companies are
Yep.
reporting. But as you said, revenue growth for companies in other sectors has weakened also.
That's right.
So does that imply that we may see companies continuing to cut their way to profits in the new year?
That's been the trend, as you know, for the last many years. That was to a large extent the trend in Q3 as well. Though I must add that we have been seeing an uptick in revenue growth in recent quarters, including in Q3. But yes, margins, the ability of companies to control costs has been and will continue to be a big contributor to profits in Q4 and beyond.
So what are you looking for Q4 revenue growth?
It's essentially flat. When you look at in the aggregate, including oil, including finance, both these sectors have weak revenue picture for Q4. It's essentially flat. So you have about 0.5% revenue growth giving you that 4.1% earnings growth that we showed earlier. When you exclude oil, when you exclude finance, it comes to about 1.2% revenue growth.
What about full year 2014?
About the same, about 1.5% to 2% top line growth for 2014 as a whole.
What does this all mean to the stock market going forward?
You know, we need to see strong growth and management teams sharing their outlook for the coming year to gain more confidence in the consensus estimates for 2015, which is, I must add, looking for double-digit earnings growth. And if you have 10-11% earnings growth, about half of which is expected to come from top-line gains, and when you have these persistent worries about Europe, about Japan, about emerging markets, even though the U.S. economy is doing very good, but if you have that international backdrop not supportive of good business picture, then those expectations will need to come down, and that what we're looking for in the management commentary and the Q4 earnings calls.
All right, we'll look forward to more of your comments coming up in the new year. In the meantime, you can keep track of Shiraz's aggregate earnings trends, remarks, comments, analysis right on our website, Zacks.com. If you're not there already watching this video, you can link to it right off the homepage. And in the day-to-day comments during the peak of earnings season, you can track his remarks on what's going on with aggregate trends and analysis in his Ahead of Wall Street column, also accessible on Zacks.com. With Shiraz, I'm Terry Ruffalo.